Okay guys, today we're going to learn how to prepare a bank reconciliation. Okay, so bank reconciliation is where we are going to reconcile, or we're going to understand the differences between our cash balance according to our records, our accounting records as of a specific date versus the bank statement at the same date. So basically the bank statement that we get in the mail says on July 31st, we have a balance of $16,230. According to our records, we have $15,600. We need to understand the differences between these two. And you might ask yourself, well, which one of these is correct? In most cases, neither is correct. It's going to be a different number because there's things that the bank is not aware of, such as outstanding checks, and there are things that we're not aware of, such as service fees, and we'll find out about those when we receive the bank statement and we prepare this reconciliation. So let's take a look at the facts here. So this is our cash balance according to our records. This is according to the bank. There are outstanding checks. So these are checks that we've written, but nobody, the people that we wrote them to, they've not taken these guys to the bank to deposit them yet. So our bank has no idea that we wrote these checks. Deposits in transit. So same thing. This is the 31st of July. This is the date that the bank statement was prepared. Let's say we were going in to make a deposit. We didn't get there till about 4:15 in the afternoon. A lot of times if you make a deposit late in the day like that, it might be the next business day before the deposit is reflected in your account. Okay? Now, the checks that are outstanding and the deposits in transit are going to affect the bank side of the bank reconciliation, and a lot of these other items are going to affect the book side, or our company side. We'll take a look at the solution key here in a second, and hopefully all this will make a little more sense. So there's an error. A check for $270 in payment of an account was erroneously recorded by us as $720. So we made a mistake here. Anytime we see an error, it's important that we first ask who made the mistake. So if it was us, we're going to need to alter our books. If it was the bank, we're going to need to let them know so that they can make the correction. Also, the second question that we would ask is, hey, did we make a mistake that increased or decreased our cash? And we're going to need to do the opposite of that in order to fix it. We have a bank debit memo of a service charge for $50. And so that obviously is going to be something that's going to reduce the amount of cash that we have. So let's take a look here. It asks us to prepare a bank reconciliation, and let's take a look at what this should look like. Okay, so remember, according to the bank statement, we have $16,230. We have a deposit in transit. Okay, so once again, those are items that we've deposited that were not reflected on the bank statement. We know that we made these deposits. They're factored into our dollar amount that we began with, but the bank has no idea. As of the date that this was made, it's not on the statement. Okay, outstanding checks. Like I said, those are checks that we've written, but if somebody was to, if you were to go write somebody a check and maybe it takes them a couple months to actually go and deposit it, the bank doesn't have a crystal ball. How in the world would they know that you actually had written one of these checks until it's presented to them? Okay, so we're going to start out with the amount right here that is on the bank statement. We're going to work our way down, and we're going to get our adjusted balance. Okay, this is what should show up on the financial statements. It's the exact same as this down here. These two numbers have to equal. That's what the bank reconciliation is. If they don't, then you've got a problem. Okay, so we start with the bank, we work our way down, we get this adjusted balance, and then over here the other side of the bank reconciliation is to take care of the books side. So according to our books, our company records, we had $15,600. It was a mistake we made in recording the check. In order to fix that, we're going to need to add that back, and we're going to need to subtract the service charge. When we're done, we get $16,000. This is the amount that should show on the balance sheet. It should show on the financial statements. So the amount that the bank statement says is not correct. The amount that our books say, that's not correct either. The correct amount is the $16,000 and they have to be in balance. As part of maintaining good internal control, the person who prepares the bank reconciliation should not have access to the cash, right? So the idea is that the people handling the assets, such as cash that might be desired to be stolen, don't have a way to cover up their tracks by altering the accounting records. Many times when items are stolen, in order to go undetected, one would have to adjust the accounting records to hide the fact that they've stolen. Now keep in mind here that everything in the top half of this bank reconciliation, these are adjustments that we had to make in order to get to this adjusted balance. But we're not going to need to make any journal entries. This is the bank's business up here, right? So these deposits in transit and outstanding checks, they're eventually going to clear. We don't need to make any journal entries up here. We do, however, for anything that affects the the book section, the bottom half here of this bank reconciliation. This is going to justify us making a journal entry. So just think for a second. Right now, our records, or before this reconciliation, our records say we have $15,600 of cash. Well, we know that the balance should be $16,000. So we're going to need to make an entry for any of these increases. We're going to need to increase our cash with a debit. Okay? And down here we're going to need to decrease our cash with a credit. And after we've made those entries, then we will be at the correct balance that should be reflected on our financial statements. Let's take a look at a slightly more complicated bank reconciliation here. We can see here, and there's steps listed for you. We begin with the amount per the bank statement and work our way through doing these various steps, and at the end we notice that we have to have our adjusted balances that equal. Now, based on this bank reconciliation, we can see there was some deposits in transit and there were several outstanding checks, right? So basically, when you're looking through your financial records, these outstanding checks would appear in your records, but they would not appear on the bank statement. And that would indicate to us that the bank doesn't know that these exist. Okay? So those are what our outstanding checks are. Work our way down here at the bottom. There's some service charges. It says check returned because of insufficient funds. So an NSF check. There's an error in this case, a $9 mistake that we made, and we need to rectify that. So once again, let's take a look at what the journal entries will look like. Remembering, we don't need to worry about any of these journal entries up top. There's none that need to be made, only for the bottom half of this reconciliation that affects our books. Let's take a look at what the journal entries will look like. Okay, so we can see here that there's two entries that we need to make. The first entry is going to be to reflect the increase in cash. Okay, so there was $408 that was collected by the bank on our behalf, and actually the example said that some people owed us $400, and there was $8 of that represented the interest component. Okay, so we're saying, hey, we have $408 more of cash. We just learned about it when we got our bank statement. We need to increase cash. We need to reduce this asset, this claim. We're saying, hey, you've paid us, so we're gonna reflect that in our records that you owe us $400 less, and we're gonna show $8 of interest revenue. Next step, remember there was a NSF check. This guy wrote us a bad check. We need to put this accounts receivable back on the books. We need to reflect the service charge of $18, and we need to correct that error that was made for $9. When we're through with that, we're going to have $327 of a deduction to our cash. Once we've made all these entries, our cash balance will go from $2,549.99, and after we make those journal entries, we'll end up with our correct balance of $2,630.99.